Hello traders, Gary Wagner here just before 10:30 in Honolulu, 4:30 in New York on Thursday. Happy Aloha Thursday, as we say on the islands. It is the second day of April 2015, and this is the daily report for gold and silver, our weekend review, coming to you a day early in honor of Good Friday and the fact that the markets will be closed tomorrow. Jobs report coming out tomorrow, so we do have some very, very important data which is going to really hit traders' desks, so to speak. But for right now, we do have gold trading off about $2 on the day. 1202 is what you're seeing on the screen. Now, that doesn't tell you the whole story. First, low 1194.70, high 1206.60, but the real key is a weakening dollar. Dollar really under significant pressure today. Actually, in terms of the net change for gold, it added about $8 worth of value, but this was an all sellers day today. Normal trading putting it off about $10 on the day, thereby giving us a net change of about a negative $2. Silver also trading lower on the day, actually off over 8% or down about 19 cents, 16.75. That's what we're looking at on the screen. 16.57 on the low, 1700 on the high. And just like in gold, a weakening U.S. dollar is adding about 12 cents to the price of silver. Actual trading is off about 32 cents rather than 20 cents on the day, and that's giving us our net change of a negative 20 cents on the day. We'll touch on silver in a little bit, but first let's touch upon the pattern that we recognized yesterday and the fact that we didn't get follow through or confirmation. And I'm talking about the Three River Morning Star, which was identified in both markets. Here we have it in silver. That's these three candles here. We'll touch upon that in a second, but let's take a look at gold. So traders, yesterday we talked about the unfolding or the completion of a candlestick pattern simply titled a Three River pattern. You can have a Three River Evening Star or a Three River Morning Star. We also get variations off of both of those. To kind of highlight what we're looking at, it is these, not today's candle here, but it is these three candles, the red, the star, and then the green, excuse me, that actually form this pattern group. The star, of course, being the small-bodied candle that is gapped between the green and the red candle. In essence, what you're seeing is a key reversal or a pivot kind of a pattern. Now, we look for that or variations on that particular pattern. Here we get a variation, for example, in which first criteria, market's been in a defined downtrend. You get a long red candle kind of signaling the exhaustion of that bearish trend. In this case, though, you got two stars gapping on the bottom, and then that, of course, was followed by the final candle for your actual pattern group, the Three River Morning Star. Now, if you notice on the day following that pattern, that is this green candle here, you do get a confirming candle. However, you get a lot of it kind of taken away on this red candle, and it takes really until this variation here, red, star, green, confirmation. When you really get a strong signal here is where you get your buy signal right in there. You do get a confirming candle here, but you don't really get the follow through. So it kind of stayed there. But nonetheless, the patterns is a very valid pattern to look for. That and piercing lines are what I tend to look for on the bottom. Now, the one thing that we talked about yesterday was that to take this call, what we had to see was a confirming candle, and a confirming candle for this pattern group, the Three River Morning Stars, is a green candle, and that green candle has to have a higher high and a higher low. It would look something like this. However, that's not the case, and that's the reason we didn't issue a buy signal, because it simply wasn't triggered when we look at the market. This red candle here in no way can be construed as a confirming candle. Now, we're going into a holiday tomorrow, markets being closed, and I think that that has a lot to do with it. And the other thing is the jobs report, most important report of the month. It's coming out on a day when markets are going to be closed with very little time to react. We'll see how that really takes place over the weekend. So if we get some sort of a surge that comes into the market because of that report, we'll react to it, but we'll react to it really on the opening in Australia, meaning Easter Sunday here. Markets are opening up overseas, and that's when we would actually take the trigger and issue a buy recommendation should we get a nice little clip up. Now, speaking of little clips up, the real question is, have we really ended this little downtrend that we saw here? And when you consider you had this 80-point rise, and from that 80-point rise, the market goes to, call it 1220, and from 1220, it comes down approximately 50% at 1180. That is a valid impulse type of scenario. In other words, in an impulse scenario, you're going to get a series of waves. Your corrective waves on a bullish impulse cycle are going to be anywhere between, call it 38 up to about 61% on that second wave down. That tends to be the deeper of the two, and then a return. Here you got a 50% retracement. You also, when we got that retracement, received a pretty strong candlestick pattern. However, as of yet, we have not gotten confirmation, and that's why we will be going into the weekend flat with no open positions. And as we talked about at the beginning of the report, the big news right now, of course, is the dollar. Take a look at this. And we talked about different patterns that we look for in the marketplace itself. And we talked about the fact that that variation off a three river is such a almost a common pattern, but you can see it right here. This is the variation. And the reason I call it a variation is you're getting after a defined uptrend, so the market had been moving up off of these lows, you get this green candle, but it's not really that long of a green candle. You usually want to get a large green candle kind of signaling the exhaustion of that upside move. You get a consolidating candle, which is your star or your doji, and then you get your candle which moves it down. Of course, to take this call on a daily chart, you want to get confirmation. Confirmation on the evening star is a red candle with the lower low and the lower high, exact opposite of the morning. So that's something that we definitely want to keep our eye on, because really trading gold has been so dollar weighted because the dollar's been so active and been on such a runaway tear. So it looks as though as we really go into the break here for the morning session, we of course will start seeing markets close as Good Friday starts to happen all throughout the world. But we do want to end on this note. The note is we have the equities markets higher today, we have the dollar lower, and we have gold and silver nominally lower on the day. But really selling prevailed today in the precious metals markets, but it was dampened by a weakening U.S. dollar. This has been Gary Wagner wishing you as always good trading. We'll talk to you on Monday for another daily update and review. For those that celebrate Easter, happy Easter. For all of us, let's wish for peace on earth and goodwill towards men. Have a great weekend. Bye-bye.